If you've been in the stock game for some time, then Michael Burry might be someone you know. He's not afraid to share his thoughts and predictions about the stock market and the economy in his Twitter account. However, recent tweets from Burry haven't been the most optimistic. For months, he's been hinting that a huge crash is approaching. But what's even more interesting is that Burry, with over 1,100,000 assets, has decided to sell his entire portfolio. Why? We'll learn about that in today's video. Hey, welcome to Stock Market Mate. Today we'll talk about Michael Burry's massive move, selling his entire stock portfolio. Before we get into it, subscribe to the channel and hit that notification bell to help us beat the YouTube algorithm. If you're done with that, then let's get right into it. Michael Burry has been bearish in the stock market and the economy for the past 18 months. He made some big bearish predictions in both Tesla and Cathie Wood's ARK ETF using long put options, but was too early in both positions and had to exit them with losses. He has grown incredibly bearish with his most recent tweets and has been warning about hyperinflation, an economic depression, and a huge market crash now for almost 2 years. However, he still held stock positions and tried shorting up until the second quarter of 2022. From April to June, he exited all of his positions and went to cash except for one stock position. Burry sold everything. Based on his recently released 13F, the legendary investor Michael Burry exited all his positions, which as of his previous 13F filing on March 31, 2022, had a value of over $200 million. Scion Asset Management sold off its long positions on 11 US equities in the second quarter, including Google's parent company Alphabet, Booking Holdings, Discovery, Global Payments, and Nexstar Media Group. The asset management firm earlier held as much as $165 million of these US stocks at the end of the first quarter this year. Some other major stocks that Burry sold are a stake in Facebook parent Meta Platforms that was worth $12.9 million at the end of the quarter, a $19.7 million stake in Cigna Corp, and a $23.1 million stake in Bristol Myers Squibb Company. Private jail operator GEO Group was the only stock he held as of the end of the second quarter of 2022. This position brought his portfolio exposure down to only $3.3 million in this one position as he shifts his capital to all cash excluding being long jail, which is about as bearish as the world's most famous perma-bear can be. Burry had taken a knife to his portfolio in the past as well. He slashed the portfolio from 20 holdings to 6 in the third quarter of last year, reducing its value from $140 million to $42 million. Close followers of Burry are likely to interpret his decision to effectively liquidate his portfolio as a bad omen. The hedge fund manager diagnosed the greatest speculative bubble of all time in all things last summer and said owners of meme stocks and cryptocurrencies were careening toward the mother of all crashes. Burry has not said he is currently buying any new stock positions or putting options on Twitter. His next 13F filing will not be submitted until October to update us on his portfolio. However, we know he went into June with all cash in one stock, so he has room to do whatever he wants with new positions. What is Burry saying now? Burry was not discouraged from his bearish outlook through the recent stock market rally where indexes returned to the 200-day moving averages and were up over 16% from their lows. He noted the similarities between the 2022 chart pattern and 2001 as the dot-com bubble popped back on July 22, 2022. More recently, he has told investors not to get too excited about the recent rally in stocks, as previous downturns have seen many temporary rebounds before finding a bottom. He also said the silliness in markets during the height of the pandemic had returned and tweeted over the weekend that he can't shake that silly pre-Enron, pre-9/11, pre-World.com feeling, referring to the euphoria that preceded the dot-com crash. His portfolio matches what he has been saying by going all to cash. With his lack of buying put options and no reported short selling yet, it appears he's concerned with more extreme volatility and looking for a better spot to make his entries. Burry has also been a deep value investor early in his career, so he may be looking to buy a deep dip after a crash once companies are valued to buy based on intrinsic value or future discounted cash flow streams. Why did he sell all his stocks? Burry took to Twitter to say that the 18% gain in the tech-heavy Nasdaq Composite Index since the start of the third quarter is likely to reverse. Burry deletes his tweets frequently. As per the SEC filing, Burry's firm has just took one stock holding at the end of the second quarter. Scion held 501,360 shares of the GEO Group Incorporated. The group invests in private prisons and mental health facilities and has a market capitalization of less than $900 million. The Florida-based company is a leading provider of enhanced in-custody rehabilitation, post-release support, electronic monitoring, and community-based programs according to its website. What is Michael Burry shorting? Burry exited his Apple puts that were worth approximately $36 million in Q2 of 2022 and doesn't have any other short positions currently. If Burry opens any new short positions in Q3, we will find out when he tweets about them or after his next 13F filing in October. He has 45 days after the end of the third quarter to report his new positions publicly. As far as we know right now, Burry is all cash except for GEO and looking for his next big short. What Michael Burry's stock exits mean for crypto? As Bitcoin and crypto have a strong correlation to the stock market, especially in relation to macroeconomic events such as Federal Reserve interest rate hikes and the Russian-Ukraine conflict, Burry's bearish outlook on stocks may also be a warning sign for the crypto sector. When asked by Cointelegraph whether Burry's actions could spell potential gloom for the crypto markets, however, quantum economics founder and CEO Matt Greenspan said he's relatively unfazed by Burry's moves, despite his track record of predicting bearish scenarios. Greenspan stated that it's near impossible to predict the time and scale of crashes and suggested that there's generally always something bearish on the horizon that could potentially send stock and crypto prices crashing. He said, "Predicting a stock crash is a lot like predicting an earthquake. You know one will happen every so often, but you can never tell exactly when or how severe it will be." He also stressed that investors shouldn't jump at every piece of FUD that circulates online, noting that investing is a long-term play and doesn't normally work out for people who jump at shadows. Burry warned investors that despite the recent rally in crypto and stocks, winter is coming. He pointed to US consumer credit rates rising by $40 billion per month in contrast to its historical average of $28 billion month over month as reasons for such. Seeking Alpha analyst Garrett Dewick, however, offered a different take to Greenspan, outlining in a Tuesday article that Burry's concerns over macro factors such as consumer credit, housing, and business conditions may be something investors should take note. I take notice when Michael Burry is a bear, and right now he's a huge bear. By liquidating the positions in his portfolio, saving one, he's putting his money where his mouth has been, out of the market. The macro data seems to support his hypothesis. I'm seeing weakness all over the place. The consumer is struggling while housing and business conditions are projecting job weakness. Earnings estimates are too generous, and negative earnings will materially impact equity valuations, which are already stretched. He added, Burry's predictions. While Burry's predictions have had varying accuracy since he rose to fame by shorting the 2008 housing bubble, some of his most recent takes in crypto have generally come into fruition. For example, in March 2021, Burry described Bitcoin as a speculative bubble that poses more risk than opportunity, as he predicted a crash would soon unfold. This coincided with the price of BTC going from $59,000 in March to around $34,000 by the end of May. In June, he followed that up by labeling the price action in stock and crypto markets as the greatest speculative bubble of all time in all things. And while BTC went on a surge to a new ATH in November of around $69,044, no one needs reminding of how much the market has crashed since then. Well, that's about it for today. If you found this video helpful, kindly click the like and subscribe button. Also, you might want to leave a comment below. We love hearing from you. Thank you for watching, and we'll see you in the next video. If you enjoyed this video, you're going to want to watch one of these two videos right here. Enjoy!